Hello team, in the community chat Louis was asking about how we use sessions in our entries, and I replied to this, and if you've read over you might have an overview of what is going to be said here, but like he said it is a little bit confusing to read, so I thought I'd jump in and show you a live example just here. So for example, let's look at today's second GU trade that ended up hitting break even after hitting TP1. So my bias today was bearish, and I've made a more in-depth video on that, but simply put, I can show you why if this decides to load. Simply put, we were getting rejections here, signifying that we're going to potentially push down. Didn't seem to do that big of a push down, so we'll probably be looking to buy tomorrow, but let's see how the market closes. But essentially that's why I was selling today. So now if we jump back into 5 minute, zoom out. So here's our Asia session, midnight in GMT, so just normal British time, to 5 AM. That is our Asian window. Then here is, this isn't quite the London session. London session starts at 8. But this is my trading window from, this is my trading window from 7 to 3. Tom's trading window is 6 to 3, so that's why this is a bit bigger. Essentially what we've done is we've taken the Asian high, as you can see I've marked out here. This means all the buys that are layered above here in the Asian session have been tagged in, and now what the market really wants to do is it wants to stop them out. That's how it makes its money. So we've tagged them in. They're probably pretty hopeful at this point, looking like it's going to run up, and then news takes them out. And news creates quite a big fair value gap here, but it creates a smaller one down here, which is where I chose to enter. The reason I chose to enter is because we have a bit of confluence. As you can see here, we have a breaker block. This is where the market structure shift has been strong, and it's taken out a key point, and this is our key point that it's taken out, so I chose my entry there. So that's how we used the Asian session. That's why we used it. It's taken out that liquidity, so we're expecting the market to stop out those buys and go in our favour, which was sell today. So to look at another example, let's try and look here, sorry it's just taking its time to load, at a buying opportunity. So, got this marked here. If we replay to here, so what we can see when the sessions load, so here's our Asian session, here's London session, it's past 7, so I would be looking to enter. If we skip a few candles ahead, you see we take Asia low, so this is where I'd now be looking to find an entry for my position, and quite quickly we get one here. So this was a live trade taken in the channel. That's how I knew this would happen here. So if I put this here, let's do our levels. So there we go, I've drawn on my levels, and let's see what happens. So we tag in, very quickly run to TP1, so that means for those who have been in the channel a bit longer, we set break even, we then continue to watch that run, and I believe the outcome of this trade, I think my internet's been a bit slow right now, was a TP2 and then break even. So essentially that is where we're using our Asian session and why we use those levels. Like I say, it's liquidity, we're looking for that to be taken out. When it does, we're looking for the market to then go in the opposite direction and take out the people who are either selling at the bottom of Asian session or buying at the top. So I hope that clears that up for you, and thank you for watching.